Welcome to today's session and thanks for joining. In these live sessions, I demonstrate a technique for swing trading profitably in any market condition by taking only high probability and low risk 360 degrees trades. I am Sagar Nandi, active trader in multiple markets. Here are my contact details. I trade only using one trading system queue that runs on Metastock and TradeStation platforms. Queue has multiple components. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. It is suitable for me, but I do not use the leverage inherent in options. I use options because it allows me to trade with more flexibility. I have taken one trade recently using options. I'll explain that also in this market recap. Q charts instruments that often move the market. We start with dollar index ETF UUP. I was expecting UUP to hold the two direction lines, yellow and white, which would mean that the uptrend would be intact. It did fall below both of them. However, on Thursday and Friday, both these days, it displayed bullish indecision at the low. We have a bullish indecision cluster now that says that it is somewhat more probable now that UUP will go up. At the same time, we have a trend line resistance. Unless we can clear the trend line resistance, that probability may not be very high. So we'll see if it can break out of the trend line resistance. If it breaks out, that will be bullish for UUP and that may put pressure on the market. And if it reverses from the trend line resistance or from the yellow, white, both of those direction lines, reverses downward, then it will be bearish for UUP, which may be bullish for the market, though that inverse correlation does not always work. The direct correlation of the other market instrument always works, and that is of mega cap custom index. In the weekly, the mega cap custom index is of bearish color. In the daily, it tried to go above the trend line resistance and reversed sharply, creating a false upside breakout. As I have explained earlier many times, a false breakout is even more powerful than a simple reversal. Therefore, we have more reason to be bearish on the mega caps. In the momentum chart, we can see that it tried to go above the 50-day moving average but reversed, thereby creating one isol failure and also green candle high. Green candle high and isol failure. It has two more bearish momentum signals. The candle color itself is bongo, that is bearish, and we also have pocket pivot. So we have four bearish momentum signals created a false upside breakout at the daily trendline resistance. Daily color is bearish, weekly color is bearish. It seems that mega caps are more likely to go down than not, though it does not have any short setup at the index level. After mega cap index, let's look at the market breadth internal health check. Usually the market follows the internal health, not the other way around. Friday the market pulled back. Until Thursday many people were bullish, some were super bullish. If you noticed, my last week's trade idea was actually a bearish idea. We'll see later how that played out. During the week, I did not share any bullish idea. I didn't share any bearish idea also. I was watching the market. On Friday, the market pulled back. Could we anticipate that? Yes, we could anticipate that. That is why I was not eager to take many bullish trades. One thing that I showed in last several market recaps, while the market was going up, I showed that what was leading the market, and in fact it is even now leading the market, is small cap and value. A strongly bullish market is led by growth stocks, not value stocks. So that was a concern. Now you can see in the daily interval, in the market breadth total view, there is bearish divergence between price, which is going up, and advanced decline, up down volume, both are coming down. That is a bearish divergence. It can resolve in that downward direction. But more than that, there was something else that told us that Friday's decline was likely, and that came on Thursday. That did not show up on the total view, but let's drill down into the composites and then further into the major indexes, all breadth charts. I'll point to the essential indicators, and you may pause the video, read the other indicators if you wanted to. In Nasdaq also, we see a bearish divergence between price and advanced decline up down volume, and to some extent we saw that in NYSE also. Here we are looking at Nasdaq breadth on the left, NYSE breadth on the right. And then there was another indicator, thanks to Dr. Jeffrey Scott, after watching whose videos I incorporated it in Q systems, just like I did the same for bucket analysis, which will come shortly. Notice when the 3-month new high low hit the upper extreme overbought condition, at that time I mentioned that some of those stocks are likely to come down, though the indexes might not come down, and that indeed happened. How we know it happened? Because the plot itself came down considerably, came from extremely overbought condition to almost neutral condition. So some of those overbought stocks came down. Those could have probably gave lucrative shorting opportunities at the top. That was earlier when I pointed to that overbought condition and said that a decline in the plot itself was likely. And on Thursday, though the market rallied, I noticed that the plot again hit the extremely overbought condition, and that was one thing that told me, other than the fact that we had bearish divergences in internal breadth, other than the fact that the rally was being led by value stocks, not growth stocks, The 3-month new high low in NYSE told that a decline was likely. Friday was just one day. We'll see if the decline continues further. But it was not only NYSE 3-month new high low that told me a decline was likely. Let's now drill down into the major indexes internal health. Here we have the internal breadth of small cap on the left, which was also extremely overbought on Thursday. Same was true for mid cap. Same was true for large cap also. That was not true for Nasdaq 100 because the mega caps were underperforming. So though the market was going up, it was bullish, it was also extremely overbought at the close on Thursday, and I anticipated a pullback. The pullback again happened for only one day. We'll see if it continues or not. As we go forward with our market analysis, we'll finally infer our preferred trading direction. After internal health check, let's look at market's external view. This is how most people around the globe see the market. Starting with S&P 500 ETF SPY. Remember in the last previous market recaps I showed and mentioned that when the bearish headwind that could push price down creates a watermark resistance, it is not unlikely. It is quite natural for price to try to retest that level, wherein further selling pressure in this case might come in, and it indeed happened. Now price tried to go up to that watermark resistance and then reversed, and on top of that we have a bearish headwind in weekly. In daily it came near the watermark resistance and reversed, giving a bearish flow and also a bearish release. Both the weekly and daily are in bearish color, and it is pointing to further down move because the trend line support is far away. QQQ currently is underperforming the market. Relative performance line is sharply tilting down, and that is expected because mega caps are underperforming and QQQ is most influenced by mega caps. Now in QQQ, weekly backdrop is bearish, daily flow is bearish. In fact, it is giving a possible trend following short setup. I will not like to short QQQ itself, but I would not mind looking at constituent stocks which are weak in fundamentals, in weak industries, and that are also giving low risk short setups. QQQ trendline support is also some distance away. It is more likely that price will come down from here, maybe not immediately on Monday, but in next couple of days or weeks, then going up. That is my inference. Dia, Dia is of course outperforming the market. Relative performance is sharply tilting up. It did have a new closing high for the week, and it had a new closing high, all-time closing high on Thursday. Friday price came down little bit, but it closed just above the watermark resistance in weekly and daily. Notice that at the daily level we had a bearish headwind. If it can calm down little bit next week, then it will create a false upside breakout at a level where bearish headwind came earlier in daily, and that will prove to be bearish. Trendline support is far away. None of these charts, even the strongest one, DIA, and certainly not QQQ or SPY, allow us to buy. IWM, again it is outperforming the market, created a new all-time closing high for the week. On Thursday, it created a new all-time closing high. Friday price came down, and interestingly, it has a bearish headwind as well as a bear release signal on Friday. If it can come down little bit more next week, it will again, like DIA, create a false upside breakout. Trendline support is far away. If the false breakout happens, I think it is more likely price will come down than not. Does not allow us to buy. Continuing with bucket analysis, pinpoints reversals with remarkable accuracy. And again, this is what, along with the 3-month new high low, could alert us on Thursday when the market was very bullish that a reversal was likely. Bucket analysis, of course, you had to use the real-time QH for that. QH also has sector industry stock breadth. It shows where the market came from, where it is now, and where it may go next. We'll see what that advanced decline breadth is telling. But before opening QH, I want to show you a snapshot of the bucket analysis in QH in real time on Thursday as of around 3 p.m. EST, that is afternoon session. Thursday afternoon, the percentage of stocks above upper Bollinger Band for S&P 1500 stocks hit, you may say, for all practical purposes, 30%. Whenever it hits 30 to 40%, that range, it is extremely overbought and a pullback was likely. So we had the 3-month new high low, and we also had the bearish divergence in advanced decline up down volume. On top of that, we had the bucket analysis flashing extremely overbought condition on Thursday. Though many people were thinking of piling up into buying more stocks, these extreme overbought situations told me not to do that. Instead, I could even look for some shorting opportunities. Can some stocks be bought now? Yes, of course, some stocks may be bought now, and I'll come to that. I'll probably share some buying ideas today, but I'll come to that later. Let's look at, not find that, let's look at QH. See, on Thursday, I showed the snapshot. In the afternoon session, percentage of stocks above upper Bollinger Band in QH was at 30% level. On Friday at the close, it came down to only 8%. So huge number of stocks, huge percentage of stocks in S&P 1500 came down. Came down from where? Came down from above upper Bollinger Band. That was very high price level, and those gave lucrative shorting opportunities, at least some of them. Friday closed bearishly for sectors industry stocks, but still 3 sectors were up. Which sectors were them? They: consumer staples, defensive, real estate, defensive, utilities, defensive. 3 sectors only went up by small percentages, but they were all defensive. Let's look at the sector industry stock breadth over multiple periods. 1 month, longer term period, bullish. That was expected because market was at or near all-time high. 10-day bullish, even 5-day was bullish. 2-day the bullishness reduced. It was still bullish, but Friday it turned bearish. From bullish the pattern is changing to bearish. This favors taking short trades, not long trades. Lastly, very importantly though, last but not the least by any means, find the technical breadth. We only profit by buying stocks going up or shorting stocks coming down for directional trades. Most of the Q trades are directional trades. Q Finder has technical breadth. I use it every day, every week to decide overall posture to adopt, and then I can do easy drill down to find low risk trade setups. Weekly technical breadth still bullish. We had only 1 day's decline. We saw in QH 5-day secondary stock breadth still bullish. That is in sync with technical breadth being bullish for the week. However, as you know, whenever I see the headwind bearish alert in the weekly interval, I anticipate that price is going to come down, especially for stocks that are at a very high price level. The headwind comes at the very top. So I'm expecting stocks that were at a high price level, like technology stocks, likely to come down. Which stocks may go up? We saw that already from sector analysis. The defensive stocks may go up. How was Friday's technical breadth? Bearish across all categories. Friday was a weak day, and on top of that we have a bearish alert in the daily interval also from headwind as well as red candle high. Both of these alerts come at the high price level, so again that favors taking short trades from stocks that were at a very high price level. Market level summary: the most important trading decision is whether and where to buy or short, or whether to stand aside. Based on what we saw, my preferred trading direction is bearish side for the market in general. However, if I am buying some stocks, I may not mind buying into defensive stocks, preferably with high dividend yield, so that even if I get stuck, I may just hold it for the dividend yield. I'll try to show you at least one such stock. Before that, review of last week's trade ideas. I shared only one trade idea in the last market recap. The sharings are not supposed to be for trading tips. Is how I am analyzing the stocks using live systems and then reviewing how they played out. I shared Lennar as a bearish short setup on this day. It was reversing from daily and weekly trendline resistance. It had a bearish flow as well as bearish release at that time. Entry price would be close of Friday 1 week ago. Stop would be just above the recent high, which was just above that Friday's high, and one would book profit at the trendline support below or when the risk distance was covered. By both measures, the profit exited with a nice profit. The trade exited with a nice profit. Notice again how beautifully, though the market was going up until Thursday, this stock almost effortlessly came down, it seems, after it gave Q 360-degree short setup. And the secret is Q has very robust technical setups, but I also combine that with industry weakness and fundamental weakness to share this idea. 360 degrees ideas work very well. Proof of the pudding is in eating, as we see once again in Lennar. This week's trade ideas. Let me explain some patterns again with live examples that I shared earlier. Some patterns that work very well. Let me show you a stock AIG and explain that pattern. If you find a stock that is fundamentally strong at price extreme low, that is at a very low price level, jump thrust low, that is it was falling sharply at low price level, and then suddenly you see big move up 3, the parent of all bullish momentum, then you would infer, at least my inference is, someone big stepped in to buy the stock. And as I say, if the stock is fundamentally strong in terms of vital, almost always it goes up eventually. And this is a live example of that. And I am sharing this example to illustrate that whatever be the market condition, you are able to find probably trades in both directions. And in this case, I am utilizing this pattern in AIG, well-known stock AIG. Stock fell sharply. It was at price extreme low, and then it hit jump thrust low, that is at low price level it was falling more and more sharply. Then all of a sudden came big move up 3. Somebody, someone, something stepped up and bought the stock with huge bullish momentum that prevented the stock from falling any further. As is not unlikely, price tried to retest that level, created a false downside breakout which was accompanied by bullish indecision cluster. Looking at that, if you were tracking the stock from the point the big move up 3 came, big move bullish indicator came at jump thrust low, price extreme low, you could probably buy it on Wednesday itself, or you could buy it on Thursday. I would not buy it on Friday, it is already a bit far away from the recent swing low. If you look at the other two charts, direction force, huge direction force came on Thursday and again on Friday. If you look at the momentum chart, large momentum count came on Thursday, again on Friday. And of course, when the first big move bullish indicator came, we had direction force, large count at that time also. So this is a stock where you could use that unique Q pattern, big move at jump thrust low, price extreme low, came here. You could continue to follow the stock, and when it created the false downside breakout with bullish indecision cluster, you could buy it on Wednesday or Thursday. You notice there was a bull release as well. Now before buying, I would of course look at the stock using Vital to check if it was fundamentally strong. Remember, this pattern works beautifully for fundamentally strong stocks, and I use Q Vital. It has to have a strong Vital scorecard. And if I look at the scorecard, few things immediately catches my eyes. One is it has high earnings growth and accelerating earnings growth. No wonder that insiders are buying. Stock is a profitable stock. It makes profit in whichever way you look at it from earnings per share. On Friday, when the market sharply fell, 74% of peer stocks in the property and casualty insurance went up. So the industry was strong in itself. And if I look at its relative score from Q Edge, the industry's relative score, it was one of the strongest on Thursday and Friday both, and it is one of the most accelerating also. That is a kind of stock I would like to buy. Again, the pattern could be used, the fundamental scorecard, industry scorecard could be used to buy it on Thursday. I would not buy it on Friday. That is not my style, to chase the stock when it is already sizable distance above recent swing low. So that was AIG. I explained the use of the pattern, and interestingly, isn't it, when the market is looking weak, you are able to find buying ideas in that market also. Let me share another stock. I don't have any position in AIG, but I told you that I would like to buy, if I buy any stock, probably I'd like to buy value stocks. Value stocks were doing better than growth stocks and stocks with high dividend yield. And here is one such stock, MO Altria. It has some earnings growth. It's undervalued stock. Funds are accumulating. They tend to know more than us, same as insiders tend to know more than us. And look at the dividend yield, 7.22%. It's a profitable company. 100% of peer stocks went up on Friday. And if you look at its industry score, again, like we saw in case of AIG, one of the strongest industries and one of the most accelerating industries. And in fact, tobacco is in consumer staples. If we look at the sector itself, consumer staples, the sector also is one of the strongest and one of the most accelerating. Remember, on Friday, only 3 sectors went up. All were defensive. Consumer staples was one of them. So consumer staples allows buying, tobacco allows buying, MO's fundamentals allows buying. Lastly, let us look at its technicals. MO had a sharp drop here. Now it is starting to go up while the weekly trend line support is holding and the daily trend line support is also holding. On Friday, when the market fell, this stock closed with a bullish shape candle, bullish color candle in daily, and weekly is holding the price level. What kind of instrument could I use to take a long position in the stock? This has high dividend yield, so one could take short put vertical, or if one was willing and able to hold the stock long term if assigned, then one could trade with naked short put as well. I have a naked short put position, a bullish position in MO. Because it is naked short put, you can assume that I am not planning to apply stop to this stock. I'll simply hold it if I get assigned. If it goes up, I'll book profit at 50% level or better if I can. So this is the kind of stock I would not mind buying in the current market situation. And on the short side, you could probably find many stocks looking at Q Finder. I will not do that analysis now. You could do that, the 360 degrees analysis using bottom up, starting with Finder. If you carry out the 360 degrees analysis using Q like that, you will most likely find other trading candidates today just as you would almost every other day. Thanks a lot for joining. I look forward to seeing you in my next session. Have a great weekend. And as I always say, as these live examples, I'm quite confident shows, there is no reason not to do that. Trade profitably. Thank you.